here, Certified Financial Planner and Vice President of Campagna Wealth Management, a branch office of TFS Securities. I want to share with you some important updates for the new year and an outlook as we progress throughout 2024. First, some tax awareness. 401k deferral limits are set to increase to $23,000 with a $7,500 catch-up contribution for those over 50. Catch-up contributions can still be made pre-tax as a Secure Act 2.0 change mandating that those contributions be made towards Roth accounts for individuals making over $145,000 has been kicked to 2026, which is welcome news for many. IRA limits will also increase to $7,000 with a $1,000 catch-up for those over 50, and simple IRA contributions will also increase to $16,000 with a $3,500 catch-up. Now let's look back on 23 and do our best to anticipate what's to come for 24. The markets had an exceptional recovery to the bear market of 22, in which the market spent the year climbing the wall of worry that comprised of inflation, higher rates, a struggling consumer, and numerous geopolitical confrontations. For the most part, the recovery was in line with our expectations. However, I don't think anyone anticipated that we would have had such a strong rally. I was certainly expecting lower returns, but am pleased that things ended better than anticipated. Unfortunately, many investors did not fully take advantage of the declines in the market and fell into the gold, money market, or CD traps. Certainly, higher rates were appealing and a sign of relief for many, especially since rates were near zero for the last 15 years. Additionally, gold is perceived as the best hedge against inflation. However, this is historically inaccurate. Stock returns far exceed that of gold during that of inflationary times. I encourage you to look at gold returns versus that of stocks. Just last year, gold was up 12.69% versus 24% for the US market. Now, between 22 and 23, gold from a total return perspective did outperform, but if you are buying stocks on the dip, you will outperform and maintain more purchasing power over time. Stocks on average return over 10.5% a year, whereas gold returns 4.92%. Let's also not discount that if gold were such a great investment, Rosalind Capital and other distributors of gold wouldn't be selling you their inventory in exchange for dollars. It's quite comical. If the last 2 years proved anything, it is that it's important to put cash to work when the environment is not encouraging, because the market moves ahead of data points. By the time the news or any data point confirms that better times are ahead, the market would have already ran away on you. That was the case for some investment managers as well, leaving many to play catch-up going into year-end, which helped to propel such a strong Santa Claus rally. Again, another prediction of ours that came to fruition. Looking ahead to 24, I think it's safe to say that it's going to be another interesting year, especially since one of the most consequential and contentious elections is on the horizon. With that said, it's important not to conflate your politics with investing. Markets tend to do well long-term regardless of the party in control. However, there are typically short-term pullbacks as the market nears election day. But once the market understands likely policy based on political party, it can then anticipate and forecast a future economic and business environment. This is why, from a market perspective, the congressional outcomes are of most consequence. In addition to the election creating volatility, I believe the market has reached a point of complacency where it is now overly optimistic about the economy. The market is anticipating that the Fed will now cut rates in 24, inflation is totally under control, and the Fed has pulled off a soft landing. This can set the market up for some unexpected surprises. Whereas in 23, the sentiment around corporate earnings and economic data were pessimistic, the market continued to get surprised by the results. Now we are likely in the opposite scenario. It's likely the consumer will continue to weaken since the bulk of the $2 trillion worth of household cash reserves is almost depleted. The Fed could change their mind and remain higher for longer should there be negative news around inflation. Corporate earnings expectations might increase, setting up a disappointment in results. Let's also not forget that global tensions remain high within the Middle East, Europe, and Asia. With all that said, there could be some positive that help the market. Inflation could remain tame and support the Fed to hold steady. Investors are sitting on a lot of cash within money market funds and have missed the rally. This could cause people to reinvest their cash, especially as those money market rates decline, which could help propel market returns. The recent decline in rates could also bring relief to consumers regarding mortgage rates. This would help free up housing supply as people will likely begin to move again. Home prices would likely come down in that scenario, but that would probably be inconsequential to the economy. And election results could end up being perceived as favorable to the market and give confidence on policy over the next 4 years. And last but not least, we can avoid World War III, which would be really fantastic. And if we don't, trust me, the stock market is going to be the least of everyone's concerns. No matter what happens this year, especially if there's an unexpected negative event, it is always important to do the following. Invest early, incrementally invest more if the market goes down, increase exposure to stocks in down markets where appropriate, harvest losses within non-qualified taxable investment accounts. Tax loss harvesting is probably our biggest weapon to add value for clients through direct indexing. You can't harvest losses if you own index funds or have concentrated exposure in just a few ETFs. A strategy with tax loss harvesting is the ultimate game changer for boosting net of tax returns. With all that said, 24 is going to be an uncertain year, a total coin toss on whether we'll have a positive or negative return. In either event, anything that impacts the market, especially related to the election, will be a knee-jerk short-term reaction. Let's just pray that we have an orderly election and global tensions cool throughout the year. As always, we are here to help you maximize your wealth and put together an action plan to rig the game in your favor. Make sure to reach out to us to discuss any of these topics further and see how we can help you prepare for the new year. Thank you.